Good morning guys. Today we will discuss the components of government budget, but before it once we will revise the definition of government budget. Government budget is a statement of the estimates of the government's expected receipts and government's expected expenditure during the financial year or fiscal year, which runs from 1st April to 31st March. The major components of government budget are the revenue budget and capital budget, because central government has defined to us the two main components of budget. These are revenue budget and capital budget. Revenue budget, revenue budget, first we try to discuss. The revenue budget shows the current receipts of the government and the expenditure that can be made from these receipts. Revenue budget is a statement of estimated revenue receipts and estimated revenue expenditure during a fiscal year. If we will go with the revenue receipts, then we have the tax revenue, then we have the non-tax revenues also. Then first we will try to discuss the revenue receipts. So what is revenue receipt? We will discuss it. Receipts which do not create a liability for the government or do not lead to a reduction in assets are known as revenue receipts. Revenue receipts are receipts of the government which are non-redeemable. Therefore, they cannot be reclaimed from the government. These are divided into two forms. One is a direct tax and second one is a tax that is divided into the sub part, that is a direct tax and indirect tax, and another one is a non-tax revenues. Then first we will discuss the tax revenues. Tax revenues, it consists of the proceeds of taxes and other duties levied by the central government. Tax revenue comprise of direct taxes and indirect taxes. Direct tax, you know better, it is a tax levied on households and firms, and its final burden cannot be shifted on the others. For example, income tax, wealth tax, corporation tax, etc. But indirect tax, it is a tax levied on goods and services, and its final burden can be shifted onto others. For example, value added tax, VAT, entertainment tax, excise tax, etc. Overall, we can speak tax is a legally compulsory payment imposed by the government on the households and producers. Progressive tax, it is a tax that causes a relatively less burden on the poor and more on the rich. Therefore, tax rate rises with rise in income. But regressive tax system, it is a tax that causes relatively more burden on the poor and less on the rich. Therefore, tax rate falls with rise in income. Then we have one more type of the tax is there, that is a proportional tax. It is a tax in which the rate of taxation remains constant with increase or decrease in income. And then one more kind of the tax is lump sum tax. Lump sum taxes are the taxes that do not depend on income. Then after the tax revenue, we will try to go with the non-tax revenue, which is the part of the revenue receipt. In non-tax revenue, so many things are there, like commercial revenue, interest, dividend, profits, external grants, administrative revenues, fees, license fees, fines, penalties, cash grants in aid from foreign countries and international organizations, which you will see on the screen. Then overall non-tax revenue of the central government mainly consists of interest receipts on account of loans by the central government, dividends and profits on investments made by the government, fees and other receipts from for services rendered by the government, cash grants in aid from foreign countries and international organizations are also included in non-tax revenue. Sorry. Now the next next component of the government budget is a capital budget. Then before the capital budget, the second part of the revenue budget is remaining, that is relate to the revenue expenditure. Then revenue expenditure, which neither creates assets nor reduces liabilities, for example interest payment, subsidies, etc. Overall we can say those expenditure which neither create any asset nor reduces liability of the government. These expenditures are incurred for smooth functioning of government departments and for day-to-day expenses of the government. For example, if we will leave the interest payment and subsidies, then we have so many other examples also for the revenue expenditure, like salaries, pensions, interest payments, subsidies, grants, etc. Revenue expenditure is also classified into two categories. The first one category is plan expenditure, that is calling the plan revenue expenditure, and then second one category is called the non-plan revenue expenditure. Then revenue expenditure, the first part which is calling the plan revenue expenditure, it relates to central plans. You know about the 5-year planning system and central assistance for state and union territory plans. For example, expenditure on health, education, law and order, etc. But non-plan revenue expenditure, which is also the part of the revenue expenditure, it covers a vast range of general, economic and social services of the government. For example, expenditure as a relief to earthquake victims, etc. Now the pandemic situation is going on, and whatever the expenditure as a relief government try to done, it is also the part of the non-plan revenue expenditure. Then we have the next component of the government budget is called the capital budget, because two components were there. The first one we discussed, revenue budget, and their all parts we discussed. Now the second component is capital budget. The capital budget is an account of the assets as well as liabilities of the central government, which takes into consideration changes in capital. It consists of capital receipts and its payments. Capital budget is the statement of estimated capital receipts and estimated capital expenditure during a fiscal year. Now if we will see the subdivision of the capital budget, then it will be again divided into the two parts. The first one is calling the capital receipts and next one is calling the capital expenditure. So now we will try to see the capital receipts. On a screen you have the various examples of the capital receipts are available. Then capital receipts are those receipts of the government which create liabilities or reduce financial assets. We can speak, these are the capital receipts. Capital receipts are obtained by the government by raising funds through borrowings, recovery of loans and disposing of assets. Under it we have two categories especially. One is a disinvestment and next one is the borrowings. Then disinvestment, if we try to understand, then disinvestment refers to withdrawal of existing investment. For example, the government of India is undertaking disinvestment by selling its shares in the Maruti Udyog. It is a capital receipts of the government as it reduces assets of the government. The next one is borrowings. It creates liability for the government. Accordingly, borrowings are to be treated as capital receipts. It is a debt creating capital receipt. The next one component we will see, which is the part of the capital budget, is that is the capital expenditure. Then capital expenditure are the expenditure of the government which result in creation of physical or financial assets or reduction in financial liabilities. These includes expenditure on the acquisition of land, building, machinery, equipment, investment in shares, loans and advances by the central government to state and union territory governments, public sector units and other parties also. It is also categorized as plan and non-plan expenditure in the budget documents. Then the capital expenditure which will be come into the plan capital expenditure related to the 5-year plans and central assistance for state and union territory plans. But non-plan capital expenditure also we have. Then non-plan capital expenditure refers to the expenditure which is not related to 5-year plans. It covers various general, social and economic services provided by the government. For example, expenditure as a relief to the earthquake victims. Overall, we can speak simply, capital expenditure creates assets and it reduces liabilities. Here one simple example is for you: construction of a school building, repayment of loans, etc. Then we have the next part, that is related to the deficit in budget, which we will discuss in a next lecture. Okay, thanks.